gold has been a cornerstone of investment and cultural significance in India, from weddings to religious rituals and financial security. The value of gold runs deep in this country. As an investment asset, it has consistently been perceived as a hedge against inflation and a safe haven in times of economic instability, and a symbol of wealth and prosperity. In fact, just yesterday, Chief Economic Advisor Anatha Nageswaran said that gold will remain relevant in wealth preservation, investment planning, and amid economic uncertainty more so. However, with gold prices now around 85,000 per 10 grams, many question whether this is still worth investing in. I think it's important to understand, Feroz, that, and a lot of viewers, of course, are also battling this thought, whether gold still makes value given the high prices of gold, or should you wait for correction? Now, everybody's of the belief that correction would come seldom and rare, but just yesterday, gold prices corrected about 1,700 rupees per 10 grams, which means that there is some sort of profit booking happening there as well. Should one invest in gold? Does that make any sense now?
Shweta, you're absolutely right. Of course, from an Indian standpoint, India has so much money in debt that it's just mind-boggling kind of wealth. So if one has a portfolio of, let's assume, 60% in debt, I don't have debt. I have a little more structured product kind of a portfolio for my clients. So if you have debt, at least half your debt should be gold. That's what I've been recommending. Because gold has the natural hedge, not just to the equity, but the currency depreciation. And that happens when there is equity markets are crashing, it's FIs are selling, rupee is going to have a large push downwards and it will depreciate. So it has a certain hedging capability, not just to the equity market, but also to the value of depreciation of rupee as well. So I would say definitely, Shweta, it should form a part of one's portfolio. It should be half the extent of the debt you possess. If your debts are anywhere greater than 30%, you can definitely, half that money should be in gold. And now coming to the second part of the question, will gold correct? Since gold is a global asset, and in dollar terms, gold had not appreciated for long periods of time. It was at $800 an ounce in 2001, and it languished there till $1,400 an ounce just a few years back. So since the unlocking in terms of the gold prices in the dollar terms happened, which are largely driven by sovereign and the way countries gobble up gold and preserve it, I personally think gold will definitely be also a hedge to economic disruptions which we currently see in the world.
All right, Feroz, and before I let you go, I have to ask you, the kind of downturn we have seen in the markets, there was some sort of stoppage there yesterday, markets closing flattish, but Nifty 50 seeing a rough decline of 15.8%. Is that likely to now exacerbate, given that Trump tariffs will now come into place, kickstarting today on both Mexico and Canada, 25% tariff? How do you see that really disrupting markets this morning?
See, I think the worst for Nifty is behind us, because like on previous time I was on the channel also, I said the risk doesn't lie in Nifty, the risk lies in the broader market. I personally think Nifty is almost at its bottom, because the top heavyweights haven't performed. They are the lowest valuations, 20%, which is Reliance and HDFC practically, are not at any crazy valuation. So I personally think the heavyweights, the top 5-7 weights, are completely beaten down on the Nifty side. So I would say that
are you saying the worst is over? Am I hearing that correct?
For Nifty, on Nifty for sure, I would say if markets were to correct 3-4%, it will be difficult for the market to sustain there for even a month.
All right, and how do you really see an impact globally as far as those tariffs is concerned? Because that is something that really jittered the markets worldwide when it was first announced by Trump. It was later delayed, but today seems to be the day.
Yes, see, what happens is, since this news has been coming in pockets, this has got priced in. I don't think the actual implementation of that will have any impact on the market, because it's gradual fall. See, if you see, there are two SEBI circulars. In fact, one latest consultation paper has definitely spooked the market and the FIIs especially. You would see, I don't know whether you've gone through that circular in page number 8 and 9, not the circular, but the consultation paper. There is a talk about capping long positions on a specific account, including FIIs, which I think is one of the most outrageous things which any regulator would have done globally. Capping long positions in the derivative markets has been spoken about in that consultation paper. So coming back to your point, I think that's more of the thing which will get unraveled of how that consultation paper becomes a circular, if at all. I fear it became a circular.
All right. And in your assessment, is that likely to spook FIIs?
It already has. I think the 500 point of Nifty fall had some degree of contribution from that consultation paper, in my opinion, what I spoke to a few FII accountants.